think that'll help. So like I said, in regards to DAX, if you've come up from 14.6 to 18, okay, let's say you're an investor down here where we called it long. I called it long at those key MAs. You know, you're now looking at literally 24% gains, roughly, or just under 24% gains, 23.5% gains. And you have to ask yourself, would you take the money at this point? You've hardly had any red candles. You've had basically no kickback. You haven't hit your 20 MA for absolutely ages. Your stochastic oscillator is sky high. There are a lot of professional traders out there who are sitting thinking, you know what? Maybe this just looks a little bit better short, and I should really start to pull off my long entries. Because remember, if you hold longs forever and you never pull them off, you won't make any money. It's impossible. You can't make money if you don't exit trades. So you'll probably find at the point where you get this, you get negative market sentiment inflow, like you had a tiny bit last week, that that comes en masse, because they start to think to themselves, okay, well, maybe things aren't as good as everyone thought, and therefore the market revalues itself. You've got to think of these MAs as the mean price, the average price, what the price should be and would be on average. And that's why you always return to it, because there's always some normality that gets experienced within the ebbs and flows of the market. Ultimately, you always come back to what is the average, or what is the fair price. And if you don't believe me, just zoom out. It has happened forever. There has never been a time where you do not return to your MAs on the DAX. Okay? So it's got to happen at some point, and the longer you pretend that it's not going to happen, the higher the price goes and the more danger you get in. So I would certainly say if you had it long, you should liquidate. And I would only just scale in lower. If you get back to 17k, that's a reasonable long very lightly, because you're still high in the grand scheme of things. You could then plan further longs at key support, but you've got to be doing all of this in line with market value at all times. Okay? So just be careful with that. If you do reach this and the market sentiment consists, if it's poor, you may find you reach 16.35 area. Okay, 16.32. So I'm definitely short biased on the DAX. I will just briefly talk about the Nikkei as well. So the Nikkei, you've had slightly less pro-business rhetoric. I really like this because you're coming back to your key fall zones, if you like, where you've just fallen from. And you've got lots of rhetoric from the Bank of Japan about putting rates up. Of course, that will mean consumers have less money and they may spend less. Businesses don't make as much. So that's why the fear has creeped into the market there. That's why you had this slew of red candles. You've since rebounded on the US news, like I said, because it seems like there's a little bit of a jitter and a scare. But I would expect the Bank of Japan will still go ahead. And even regardless of market sentiment, what you can see is this long-term market to the upside anyway. So you've already got an extreme price. Whether there's sentiment involved or not, it is still a technical short because you've come up for such a long period of time. But specifically, I do like the fact that it has retraced. You can see on lower time frames that early rejection isn't doing an awful lot. Okay, you're not really coming to the downside or the upside. If you trickle along slightly higher and then fall, it wouldn't shock me. So that is your Nikkei and your DAX. Couple of indexes there.